Okay, welcome to the weekly take on the market. I'm going to rename myself because I don't know if you guys can see that, but it says IBD webinar. This is the weekly take on the market. I will be your host. My name is Scott St. Clair. I am the manager of the premium product group here at Investors Business Daily. Take a moment to read the disclaimer. I'm not licensed. Can't tell you what to buy, what to sell, how to hedge, whether you should be short, long, sideways. One of the great perks of working at IBD is the freedom to trade within, we're under compliance umbrella, but trade and invest alongside you guys. All right, so the market indices today was a kind of a crazy day. I was going to do the video in the morning because my editor who posts it was out of the office, and I told her, sure, I can do it in the morning. I'll do it around 8 o'clock after I get off IBD Live, and around 7:30, 7:45-ish or so, my time, Pacific time, the Trump news came out with the China tariffs talks, and the market broke badly. And then I was like, okay, I think I need to wait and just see how the market closes. So it's about 1:30 Pacific Standard Time. And turn off my video so you can see the charts a little cleaner. So the U.S. is now 75% of the MSCI World Index, the most ever. Does that mean it can't be 80%? No, but it's these are what I think technicians might call alligator jaws, and normally the idea is our alligator jaws close shut. So if someday this will close, and Europe, Japan, and maybe emerging markets, if they were on here, will close the gap. But I could have said that 6 years ago in 2015. So the U.S. has been the best place to be. There's a lot of money in the U.S. Foreign central banks, foreign sovereign wealth funds. I think I read an article about Koreans, how they trade U.S. stocks. Um, um, Sorry, I got a message in Slack that distracted me. Koreans trade U.S. stocks, so the whole world is U.S. centric, and I think when that ends, whether it's today it ended or next year it ends or 5 years from now it ends, it could lead to a nasty bear market because of there's just a lot of pent up money, and if they'll all be looking for the same door. Consumer expectations are very poor, which is shocking, surprising, very unusual with the markets at all-time highs. So it's kind of a weird dichotomy between the markets and the economy. Normally, when consumer expectations this low, you can see those shaded areas are where recessions have occurred. So the recession occurs, and then the consumer expectations kind of catch up to that. And this one is the other way around. The consumers are pretty glum on the overall market. Data centers and electricity. This is very interesting. I saw this chart courtesy of Thomas Thornton on Twitter. Residential electricity prices from 2020. So there's California's second place, not the kind of second place you want. And so this is probably why the Bloom Energies and the Oklos and the LEUs of the world are moving, because maybe the market thinks they can resolve this issue. And if they could, that'd be great, because I've lived in California all my life, but owned a home for 25 years. And my electricity bill, I think, is up. It feels like it's up about tenfold in the last 25 years. And so it's up definitely up 64% or whatever in the last handful of years. So here's another kind of problem with the data centers. Another fly in the ointment is water. They need water to cool, which is why like VRT has done so well, because they're in that business of cooling these data centers. And the estimate in 2024 estimate, I wonder why it would say estimate if 2024 estimate anyways was 95 billion, and this is from Morgan Stanley, and the estimate for 2028 is tenfold. It doesn't seem sustainable, doesn't seem possible. So these are roadblocks. Roundhill Investments came back out with the meme ETF. The ticker is MEME. And what it's doing is it's looking for social media or people talking about robotics or EVs or nuclear stocks or quantum stocks, probably, as we sit here now. And so they had this, I think this is the social media index overlay. This is not the meme ETF, but they launched the ETF on 12/8 in 2021, and then they shuttered it on November 28th, 2023. Wasn't the low, but it was close. You had two two lower lows before the index has doubled off the low, and now they bring it back. So Wall Street's a strange place. The demand occurs at higher prices, and supply occurs at lower prices. That's why the old adage, strength begets strength, exists in the market, but weakness begets weakness as well. It's something to keep in mind as if the market were to ever kind of get a little bit of legs to the downside. So there was a 3X AMD ETP, which is basically an ETF. It trades in Europe, and it got terminated because it lost too much in a single day when AMD went up 28-30% that one day. And so this is the downside to these levered ETFs, and you have to kind of understand that. And it's very unusual, but not impossible. They can literally just go belly up, because this is not the first time. There was a VIX one that did a handful of years ago. And because if something you're in, let's say they come out with an Oklo 3X ETF and you buy it, and Oklo goes down 28, 29, 30% on a day, that's it. That's game over, and there's no coming back from that. They go to zero. So you have to be aware. I'm not going to say don't buy these, or because I will get into these once in a while. In fact, I'm in a couple now on the short side, because for my tax-free accounts, my IRAs and stuff, I have to be. You can't short. So if I want exposure to the downside, I have to buy ETFs or inverse ETFs. And I'll talk about it like later when I go through the indexes. But I just rarely hold these longer than, 2-3 days. It would probably be like a long-term hold for these double and triple ETFs, whether they're up or down, either way. All right, so let's go to the indexes. Let's pull up Market Surge. Okay, let me make sure I did that right. Yep, you're screen sharing. So you should see a chart of the SPY, and you can see I had these trend lines drawn on the S&P, this channel that it was in. And I was just curious if it could get above it, out of that maybe, and then if it came back down. But when this triggered this morning, that's when I started going short, when it broke that trend line. Let me turn that off now, or reactivate it. You can see what it looked like. So we've been just trading in this channel, and today we broke that trend. Let's look at the Qs. I had two trend lines drawn. So here's the first one, which it barely touched. The NASDAQ is obviously stronger index than the S&P and or the Dow. And then I have this other lower one, which we're not close to. Just as basically to be, because I don't really watch the indexes that close and how they're trading. So I like to have alerts on them to try to keep me in tune with upside or downside price action. So obviously a nasty distribution day on the market. I imagine IBD will lower the exposure 60 from 80, 100 to 60 to 80. That's what I would do. I think it's a prudent thing to do. I know it's only one day off the top, and I'm, much more active than the normal person. So, I'm like net short. That's how fast I acted today. But I wasn't that net long going in because I'd been doing selling on the way up and nothing was coming back to me. So I was, getting gradually less and less invested. I think I had 2 longs, maybe 3 longs coming into today, and I down to 1 long and a handful of inverse ETF shorts. Gold. Let's look at some of these. Gold sure looks good. It's getting kind of, out there in the news. You had the Wall Street Journal had an article and they call it the debasement trade. And so, the dollar's had a really tough year. I guess it's down 10% this year. It's one of its worst years in, forever. I don't really follow the dollar so much, but gold would probably be a proxy for the inverse of that. Silver. So silver had a very interesting day. Oh, gapped higher yesterday and then was down a lot and then closed basically up a tiny bit. So depending on the time of day, I would have told you it was it looked toppy, but then they caught it. So it seems like it's hanging in there. IBIT, which would be our proxy for Bitcoin, and it could be a potential failed breakout here. I don't know. Remember, there's a million bases down here that don't exist on this chart in the Bitcoin world, but I'm I'm not a great proxy for it because I haven't participated on the way up. But if this was a stock, I would definitely be out of it. And then there's Ethereum, which had quite the day today. Now this is a 2-time up, so it's a lot more volatile than, like, I think, is it ETHA maybe? Okay, this is a better look. So you had a break of the 50-day, tried to rally, and then a bad break today. Obviously, it doesn't look very good either. If that was a stock, I would be out. Anything else about the markets? I think that should do it about the markets. Okay, so let's go to good trade, bad trade. I'm going to do BE and BABA. So the good trade in Bloom Energy, well, the second good trade was because I bought Bloom Energy here, and then I added on this shakeout on the earnings day right there, and then I sold somewhere in here. So I thought I was a genius. I was a little late to the breakout, so I was a little too quick to sell, and then watched it, almost double from where I sold. But I don't mind re-entering if I feel like there's a trade there. So you get this bad break here, and you'd expect lower prices, and the stock obliges. So it gaps down, but it closes on the high. So you see that, I don't remember how where it opened, but let's say it opened 65, went down to 64, but closed at 69. And look at the volume bar. Look at that support. So I know it's from if I turn on the pattern rack, the closing range is 93% on the bar. If I include this, the closing range is about 50%. So to me, it looks like a support day. Looks like a day that that people that were on the outside looking in and wanted to buy this stock and just couldn't get in, this was their chance. And then the next day, it shook out again. But look at this, is really key day. So it shakes out really bad, and then closes practically unchanged. And the volume's not as good, but the price action is better because you really, I mean, if you bought this gap down and your weak hands, you watched it go from 69 to 61 in one day, probably on a gap. That's what, 11% or something like that. But then the stock gets support, and so that's where I bought it. I bought it this day. Like, to me, this looks like 2 days where they could have taken the stock down and couldn't. So then the next day, it's up a little bit. Next day, it's up a little bit. And then you have the old, it filled in the gap thing. I don't know if I believe that or not. This gap's not filled, and this gap's not filled. So I'm not a big it has to fill in the gap type thing, but I could see where maybe it kind of ran into a little resistance there because it's filled in that gap. And then boom, you get a really big day, I believe, on some news, and then I'm selling into that. Now, I didn't sell all of it. I had a little bit, and then I sold the rest as it makes a new high. This is not, there's no base here, so it's just kind of a nothing. So, because I bought it not coming out of a base, again, I'm going to look to sell it fairly quickly. The last thing I want to do is pay 70 for something, watch it go to 85, and then give all of that back. Now, if it breaks out of a long base at 70 and goes to 85, then maybe I can, risk it a little bit differently. But for this type of trade, that's how I'm going to trade it for whatever it's worth. So it turned out okay. Stock went higher, and it's hanging in there really well. It just doesn't want to go down. It's in that right area. It's in that sweet spot of energy, and you just have to wait and see. So I'll look for the next chance. Ideally, you'll get a chance off the 50-day. If something like that would be perfect, but we'll have to wait and see. Okay, so the bad trade was BABA today. I was on IB Live, and I had been out of BABA pretty much. I do own a little bit of the ETF, which pays a really good dividend if you can, if it just like it. See how if you bought it here at say 16, you get a dividend, you get a dividend, you get a dividend, and then the stock finally rallies enough where you're actually break even on this, but you've collected probably 90 cents 3 times. So this is the dividend, this gap down right here. But so I had a little bit of that, but I didn't own the stock, and I've been kind of stalking it, looking for the 10-week line is what I got impatient today. This is really where I want to buy the stock. I want to buy it off this 10-week line, something like that. And I thought, I'll just buy a little bit of it today as it gets to that, but I didn't do the math. I was on IBD Live. I got distracted. Stock broke bad. I saw it was down like 10. And so I bought it, and it didn't turn out so well. I had to stop myself out, hours later. So I'm not, a couple things. I don't like to buy stocks when they're free falling. I'm not very good at that. It just puts so much pressure on you. You should have waited for it to kind of just at least stop going down. But I just was a little bit too impatient, too anxious. I didn't execute my plan. My plan was to buy it off the 10-week. And so as it's getting close, just wait, just be patient. Just be patient. Let it get there. They almost always do. So that was not a good trade today. I stopped in a fairly quick amount of time, which is no fun. Okay, so let's go to stocks to watch. And let's just start pulling up some stocks. So here's App, and it had I think there's an SEC investigation was the news there, but ran up really well, and looks a little tired. Looks a little bit like this. I don't know what to make of this one, but it's been a leader. So I know some of you either watched that or have had that. Here's Hood. So this is really NVIDIA and Hood, or NVIDIA is the really big cap leader, and Hood is kind of the next level down as far as size leader. So this has been and Palantir is right in there too, but this has been a good 50 to 140 out in this bull market. And look, this is how you want to buy it, like this, like that. That's what I'm looking for BABA, that type of action where it comes down and just kind of sits near the 50-day. Today, not a good day, but I can't, I don't know if there's anything that had a good day today based on the market action. LRCX, another leader, not a great day. AVGO, bit of a reversal. Credo, looks precarious. And one thing about the 50-day, you don't want it to spend too much time there. See, look at what it did here last time. A single day at the 50-day. So you here, and it looked like you got it. If you bought the 50-day, it ran up to 150, but today gave back a lot of that. Jury's out on that one. A-Lab, see 50-day run up. It could get support, but it's hard to know. Obviously, you're at the whim of the market and any potential news over the weekend. If there's more news, I think the market's going to gap lower, and if there's no news, it probably opens higher and then goes lower, and then they catch it. It's all just hard to know in that regard. Apple's very interesting. It's acting so good, jumps up, and just sits here. Now it's kind of wedging up, but I almost bought Apple that day right there. I almost bought that. I really was very close to buying it. And broke down a little bit. Is it broken? No, but it broke down. Another, so here's a Japanese semiconductor stock that I bought off the 50-day. So here, off the 50-day, off the 50-day. Now this is really tough. You had to endure a gap down if you bought those, but you never hit your stop. I have to admit that I wouldn't be able to handle that. So I actually sold this reversal bar because I didn't like that action. Then I had to buy it back when it went to new highs. And I sold it on the, I guess the Japanese yen or Japanese bond market had a really bad day, and Japanese stocks are all up like 5%. So I sold into that, at least for now. Meta. So the pattern has changed. It used to be a cup with handle. Then it was a flat base. Now it's a double bottom. So the nice thing is you're getting a pattern, but the relative strength of Meta is very poor. This looks like it's from the large cap standpoint, it's a bit of a laggard as we sit here for whatever it's worth. 71 RS. Let's open up the panel. Look at the 3-month RS, 25. So stocks are going up, and this is building a base. Not normally good action. AMD, talked about that. So here's the day that, I mean, it ended up 23%, but I think it opened up almost 30. And then if that didn't do the trick, I think maybe the next day up 24%. So I don't know if it was a combination of these 3 days or if it was a single day event that closed that fund or that ETP. But this is just, you know, you're not used to, not built for that type of volatility. And that's when the volatility in the market, volatility cuts both ways. I love volatility to the upside. I hate it to the downside. But you just can't have both. So we have a lot of volatility to the upside. My fear is when that changes, you're going to get volatility to the downside. So, you know, the AMDs of the world up 25%. Oracle was up, what, 30% in a single day? 35%. I'm curious if Oracle's ever been up 35% in its life on a single day. And this is a huge company for years and years and years. And then it goes up 35% on the AI deal, I guess is the best word for it. So you get a lot of volatility to the upside. And so you have to know that can change. And if it changes, it's probably going to change the other way to the downside. I think there was a day, was it a day or a week where the S&P was up for the week and the VIX was up for the week, which is very unusual. Normally, if the S&P is up 1% or more, the VIX is not going to be up 5% or more. I think that was kind of the math on it. The VIX was up like 8%, if I recall correctly, and the S&P was up 1%. And somebody on Twitter said that's very unusual. You don't usually get that. Tesla, Did I do Tesla? Oh, I'm on Tesla. Sorry, I got distracted with the whole volatility thing. NBIS, this has been a really good stock. So you got a little bit of a reversal today. If you're in these, it's very difficult to know when it ends. I think the answer, and I've tried to do, I'm not very good at it, but I really believe the answer is, let's say you bought NBIS and it starts running, you have 1,000 shares. I think the answer is you sell 200 here and hope you're wrong. And then you sell 200 here and hope you're wrong. You sell 200 here and you hope you're wrong. And you sell 200 there and you hope you're wrong. And then in the end, you're finally out. And if the stock were to break, your average cost might be, 119 or something like that. I think that's the right way to do it. It's very difficult. I'm good at the first couple of ones. I have a hard time like holding for the next leg. Because if it's, I feel like, oh, what am I going to do with another 200 shares of NBIS? Just get rid of it. But I forgot. Hey, remember that was the plan. Execute the plan. Execution. Remember maybe I'll talk about that. It's the hardest thing, but it's so important on the quote of the day. LEU. Okay, so yeah, I mean that looks like one day doesn't make a trend, but when you study tops, you'll see this type of action. So let's go to like SMCI. It just reminds me so much of SMCI. I think I need to go out a little bit further. Let's go to like 8/8/2024. It's too much. I want to be able to see that this day. Why don't I just do this? What am I doing? 2/16/24. So you see SMCI is running and running. And to me, if you have 1,000, you sell 200, sell 200, sell 200, sell 200, sell 200. You feel stupid at 800 because then it goes to 900, then it goes to 1,000, right? And then it breaks to 800. And that's a really, really bad break. Look at that break. That is really nasty. So that's your first kind of shot across the bow. Now, is that the top? Sometimes it isn't. Let's go to SMCI. And you see look how volatile it gets. And then it gaps up again, runs to 1,100. So again, if you sold at 600, you sold at 800, you sold at 1,000, you feel stupid. And then you get a little bit of a reversal bar. And it just seems okay, right? Nothing. And then bam, another kind of bad break, another shot across the bow. And tops are a process. They just don't happen like it tops and then it goes straight down. But if you play through some big leaders after they've topped, you see this stock is literally like 35% off the high here. And if you sold 900, 1,000, anywhere there, you've got some pretty good sells. And now it's game over. So now you're back to 700 and game over. So that everybody is trapped. There's a lot of trapped money here. And that's how tops are created. So, I mean, could this be the top? It's possible. I mean, it's gone a long way. Let's look at the weekly. So it runs from 50 to 400. But it's more likely that it just does kind of what SMCI does. And then it does this and this and this, and then finally it just breaks. But I have to see. Let's see how this one plays out. Oklo. I don't know what to make of this. You see how I had this upper channel line drawn. To me, it's going to come back to that. But when and or if, really, really strong stock. A meme stock for sure. I already did Bloom Energy. All right, how about the quantum computing stocks? So you have one of these kind of days, but it doesn't look as bad as like LEUs. These stocks have done really, really well. I don't know how this game ends. My spidey sense says that it does, that it's a game, that these stocks are a game being played and that they'll come back to earth, but I don't have any skin in the game. They're too hard to short, and I've basically missed the long. IONQ. See, that one looks interesting to me as far as if you really wanted to short them. Anyways, all right. Did I get into the canaries in the coal mine? So Apollo Global Management. So the market's making new highs. And what's Apollo done? It's got an RS of 13. So you can see it has not participated at all in this rally. And right or wrong, credit is usually where the bad news occurs in markets. And Apollo might have a lot of this credit on their books. Outside my pay grade, I'm just going to, I kind of read what people say. And then if the stocks are confirming what they say, then I get interested. So Jefferies looks bad. A lot of people are worried about what they have on their books. And that's what I've read. And guess what? The stock is telling me that it's confirming what they say. I am short Jefferies. And so this just something looks like it could be wrong there. Like there's something wrong. That's kind of how it starts like that. Now, if I'm wrong, I'll hopefully can get out with a small loss, stop myself out. I've got a pretty good cushion so far, but I am still short it as we sit here. And I noticed, actually got distracted because I'm on my screen. I see that it's 47.5 in the after hours, down another 3. And see, my instinct was to go cover some, but I don't know. I think I want to stay short that. So, and I do have some puts. So the good news is, or bad news, I can't cover those. So I can't mess it up versus the stock trade. So this is an area that you can watch KKR for if there's potentially any problems in the credit world. You might have heard about the auto lender that it wasn't that big a thing, the auto lender, but that's usually how it happens. I lived through a couple of these, and it's always like something small occurs, and it's like, oh, that's no big deal. It's contained, and then it gets larger and larger and larger. The market will vote, so pay attention to the market and trust in your instincts on what you see with the market. It's been a great run. It's been a really good bull market. Hopefully you've stacked on points this year, and you know, protected a little bit. I think I'm up like in my big money, my biggest retirement account. I think I'm up like almost 30. I think it was like 20. I don't know, based on today. I think I'm actually might have made progress today from the short, so maybe a little bit, tiny bit, but up like 29. It's just, which is honestly, I feel like I should be up more, because like if I had a newsletter, my newsletter would be up like a 209%, because you know I've identified all the good ones, Hood and BE and Oklo, and I just haven't executed them as well as I wish I had. But it's that I take the good with the bad. That's the bad part of my strategy. But there are years where that type of strategy pays off fairly well for me. And one thing, if you've been in this game as long as I have, you've learned to kind of be yourself. I know Mike Webster talks a lot about how he wanted to be Bill O'Neill for the longest time. And then after a while, he determined, I can't be Bill O'Neill. I just got to be the best version of myself. And I wholeheartedly believe in that. I know there are some things that people probably shake their head when they hear what things I do on these videos or on IBD Live, but mostly there's a method to the madness, and it has worked. In hindsight, it could have worked better, of course, but that's all. That's in hindsight. I've seen a lot of people come and go in this business, and I'm trying to survive. You start compounding and compounding and compounding just from surviving, and it'll pay off in the end, I promise. Okay, so the quote of the week is from Mark Spitznagel. He's a hedge fund manager. I don't know where this was. I think it was a Wall Street Journal article. He's written a couple of books. I read the books. I didn't quite understand the I think one was called The Coming Financial Storm, but I really liked the other one, which is I'm embarrassed to say I cannot remember the name of the other book. So one is called Safe Haven Investing. Over my head. I mean, it's fine. I love market books, so there's very rarely a book that I don't like. But I prefer his other book is much better. I'm here. I'm on Amazon. One of my tabs. It's killing me. I gotta. The Tao of Capital. DAW of Capital. I like that book a lot. It's very readable. Are you going to learn anything as far as trading, investing? Maybe, maybe not. But I just love to these great investors, regardless of style. I really like to see how they think. So yeah, I recommend that book. I really like that one. But he says the biggest risk to investors isn't the market, it's themselves. I couldn't agree more. The market was so fruitful this year, and I cut off the moves on some of these really good stocks too soon, and that was a me problem, not a market problem. So my mantra is courage, patience, imagination, vision, execution. Have the courage to take the trade. I was buying NBIS when David Ryan was like, "What is NBIS? I don't know where Scott finds these stocks." Well, that's fine. Not for David. Yes, for me, the courage to take the trade. Wrong, I'm wrong. That's fine. I'll just get out. Patience. Not a so the A. I'm an A plus courage trader. Patience, I'm like a B. I used to be probably a C minus, but I've gotten to be a B. I've gotten a lot better in that regard, but I'm still not quite in that sweet spot where I want to be. Imagination and vision. Sometimes I see these things and I say this stock could go up a lot. Oklo and LEU and NBIS, they're kind of doing what I imagined they would do, but the execution is last but not least, and that's the hardest thing. Is okay, imagine it's going to go up 2 or 3 fold. You got to stay with it through the ups and downs and sideways, and that's hard to do. So the market isn't your enemy. You are your enemy. I have a mantra that I write down and say to myself each morning. I say, each morning my mind is empty. I am not playing against the market. I am playing against myself. So I write, and there's more to my mantra. It doesn't matter. You got to develop one yourself, but try to get me in the mindset of the risk is me, not the market. If I hadn't stopped myself out of BABA, here it is 157.5. I think I'm out at 161. And not only am I out of that, but I'm into the shorts, which are working, at least short term. It just, quickly, I went from, I want to buy this dip to something's changed. And my instincts were this is not acting well. This looks like a sell. And I switched fairly quickly. Like within an hour, I went from long BABA to net short the market. SPYs, Qs, Dow, short the Dow, you name it. Short the whole thing. It looked like it was heading lower. Okay. 800-831-2525, marketsurge@investors.com. Last but not least, I know a couple of you reached out about last week. I apologize. I was traveling to the Founders Club, and I was on the road, drove from Orange County, California to Vegas, and there was an accident. So I didn't get to the hotel in time. I was going to do the video from the hotel. I just didn't get there in time. So I apologize for the missing video from last week. And I think I will be back next Friday. So have a great weekend, everybody. We will see you then. Bye-bye.